Concern is being raised as Russia's diminishing gold reserves are examined, with the potential implications for the nation's economic stability being explored. The video delves into how this situation could reshape the geopolitical landscape and impact global markets. But here's the burning question. Is this just a temporary dip or the beginning of something far more dangerous? For years, Russia's massive gold reserves were more than just stacks of shining metal. They were a symbol of defiance, a golden shield against economic threats. When the West imposed sanctions after the annexation of Crimea in 2014, the Kremlin responded by buying gold at record levels. Each shipment added to the fortress of wealth Moscow believed would protect it from financial warfare. By 2020, Russia had one of the largest gold stockpiles on the planet. A towering achievement Putin himself proudly showcased as proof that Russia could survive without the West. Gold became a political statement. It wasn't just about wealth, it was about freedom. It meant Russia could trade, build, and survive, even if it was cut off from global banks or the dollar-based financial system. The message was clear. We don't need your money, we have our own. But now, that once gleaming symbol of strength is showing cracks. New data reveals that the reserves, which had been steadily rising for over a decade, are now shrinking. The trend isn't subtle. It's a sharp downturn. Think of it like water draining from a tank that once seemed bottomless. Inside the Kremlin's vaults, the situation is changing fast. Bars of gold that once sat untouched are being quietly moved, sold, or traded, sometimes openly, but often through discreet channels that avoid Western oversight. The official line is vague, hinting at strategic financial adjustments. But behind closed doors, insiders whisper that the government is burning through its safety net at an alarming rate. And it's not hard to see why. The pressure is mounting from every direction. Sanctions, war expenses, declining energy revenues, all eating away at the very cushion that kept Russia stable through previous crises. To keep the economy running, the state has had to draw from reserves that were never meant to be touched this quickly. The numbers tell a story of quiet desperation. Imagine once boasting that your vaults could carry the nation through decades of turmoil. And now, realizing that at this pace, those vaults could be dangerously thin within just a few years. And that raises a chilling question. What happens when the golden shield finally cracks? Because if gold was Russia's ultimate line of defense, its decline could mark the start of something much bigger. A shift not just in Moscow's economy, but in how the entire world perceives its strength and stability. So what exactly is happening behind the scenes? What's causing this silent drain of wealth that once seemed untouchable? Let's peel back the layers and uncover how sanctions, shadow trades, and political gambles have combined to push Russia's financial fortress to the brink. So how did Russia, a country that once prided itself on being sanction-proof, find itself running low on the very reserves meant to protect it? The answer lies in what many experts now call the silent bite of sanctions. These weren't just one-time penalties or flashy announcements. They were designed to bleed the system slowly. When Russia invaded Ukraine in 2022, the West didn't just cut off a few oligarchs or ban luxury goods. It launched a full-scale financial offensive. Hundreds of billions in Russian assets were frozen overseas. Major banks were locked out of SWIFT, the international system that allows countries to move money efficiently. Oil and gas, Russia's lifeline exports, were hit with price caps and restrictions. At first, Moscow shrugged it off. Officials boasted that Russia would simply pivot east, trading more with China, India, and the Middle East. And for a while, it worked. Energy sales continued, albeit at discounted rates, and money still flowed, just through longer, more complicated routes. But beneath the surface, the cracks began to widen. With fewer buyers and tighter payment systems, Russia's income started to dry up. The government turned inward, dipping into its reserves to stabilize the ruble, support state-owned enterprises, and fund its growing war expenses. This is where the gold story takes a darker turn. You see, gold became one of the few financial tools Russia still had that wasn't fully trapped by sanctions. It could be melted, transported, and traded quietly. But moving gold under global surveillance isn't as easy as it once was. Many countries, even those sympathetic to Moscow, are wary of secondary sanctions, penalties the US and Europe can impose on anyone helping Russia bypass restrictions. So, the Kremlin began using what analysts call shadow markets. These are hidden networks of intermediaries, private traders, offshore accounts, and small banks who help move sanctioned goods and gold under the radar. Transactions might happen in Dubai, Hong Kong, or Istanbul, often in non-dollar currencies or even cryptocurrency. But even these channels are starting to clog up as regulators tighten the screws and track suspicious movements. That means Russia has fewer safe places to sell its gold, and fewer ways to earn the hard currency it desperately needs. Each time a deal is blocked, the Kremlin is forced to rely even more heavily on its remaining reserves. It's like trying to bail water out of a sinking ship, but each bucket you throw out makes the hole bigger. And while the Russian government insists it's in control, the numbers tell another story. Inflation is climbing, the ruble's value keeps slipping, and even the state's own reports about reserve levels are becoming less transparent. The silence is telling. It suggests Moscow doesn't want the world to see how deep the strain really goes. But make no mistake, the impact of these sanctions doesn't stop at Russia's borders. When a nation this big starts struggling financially, the tremors are felt around the world. Because the real question isn't just how long Russia can last, it's how far the shockwaves will spread. So, what does this mean for the rest of the world? For global trade, currencies, and alliances that have already been shaken by war and energy crises? Wait a second. If you are new to this channel and you like what you see and hear, please subscribe, like, and join the conversation below. If you're not convinced yet, subscribe and tell us how we can earn that click. We're all about getting better together. Let's move on. Let's explore how Russia's fading gold and deepening financial troubles could reshape not just its own future, but the future of the global economy itself. What happens when one of the world's largest gold holders suddenly loses its shine? The effects spread far beyond Moscow. Because when Russia's vaults start to empty, the global economy pays attention. As those reserves decline, energy markets grow jittery. Russia is one of the biggest oil and gas suppliers in the world, and any hint of financial instability sends prices swinging. Traders panic, investors pull back, and nations dependent on Russian exports scramble to secure new deals. Commodities like oil, wheat, and metals, all tied to Russia's output, could surge in price, squeezing economies already struggling with inflation. For China and India, Russia's two biggest lifelines, this is a delicate balancing act. They see opportunity, cheaper energy, discounted gold, and a chance to strengthen trade ties. But there's risk too. Push too close to Moscow, and they risk angering the West. Pull too far back, and they lose leverage in shaping a new economic order that isn't centered on the US dollar. In Washington and Brussels, the mood is cautious but calculated. A weakened Russia could mean the dollar's dominance holds firm, slowing the much-hyped de-dollarization push. But others warn that watching Russia falter might motivate countries to speed up efforts to build alternative systems, new payment networks, regional trade blocs, and gold-backed currencies, all designed to reduce dependence on Western control. Either way, the world is shifting. This isn't just about gold bars or balance sheets. It's about power, influence, and who gets to write the rules of the global economy. And as Russia's reserves dwindle, that first domino may already be tipping. But what's happening inside Russia itself? How are ordinary people reacting as the cracks in their economy start to show? Officially, the Kremlin insists everything is fine, that Russia's finances are stable, and its reserves are strategically managed. But outside the polished statements, everyday life is telling a different story. Prices for food and fuel are climbing. Imported products are harder to find. Small businesses are closing under rising costs. And the ruble, once touted as a symbol of strength, keeps losing ground. For many Russians, this feels familiar. Echoes of the late 1990s when financial collapse wiped out savings overnight. The government is working overtime to control the narrative, flooding state media with optimism and promises of self-reliance. Yet behind closed doors, frustration is quietly building. People are starting to ask tough questions. Where's all the money going? How much longer can this last? Meanwhile, the pressure on the middle class, once the backbone of Putin's support, is mounting. Those who once traveled, imported goods, or worked in global companies now face shrinking opportunities and growing uncertainty. And while protests are still rare, small sparks of discontent are starting to appear online, in workplaces, and even among regional officials who are feeling the squeeze. History shows what can happen when economic hardship meets political fatigue. From the Soviet collapse to modern revolutions around the world, financial instability has a way of shaking even the strongest regimes. And if Russia's golden safety net continues to unravel, that tension between government control and public struggle could become impossible to contain. The question now is, can the Kremlin hold the line, or are we watching the early signs of a deeper internal unraveling? That's the ultimate question. Is this the beginning of the end for Russia's economy, or a test it will somehow survive? On one hand, the warning signs are flashing red: shrinking gold reserves, reduced revenue, rising inflation, and growing public unease. On the other, Russia has proven remarkably resilient before, finding creative ways to adapt under pressure, from strengthening domestic industries to deepening ties with nations outside the Western sphere. The next few months could determine which path the country takes: collapse or comeback. And as the world watches, investors, leaders, and everyday citizens are wondering the same thing. How will this unfolding crisis reshape the global order? What are your predictions for Russia's economic future? Could the gold drain mark the start of something much bigger? Let us know in the comments below. And don't forget to like and subscribe for more deep dives into global events that shape our world.